So I added a new stock to my portfolio, and this is one of those moves that really reflects how my investment approach is continuing to evolve over time. Because not only did I buy a new position, I actually decided to sell one of my existing holdings to make room for it. And that's not something I do very often unless I truly believe there's a strong reason behind the change. Before we get to the video, if you're new here, my name is Elliot. I make videos about investing, the stock market, and I also share updates on my own portfolio on the Robinhood app. If that sounds like something you'd enjoy, consider subscribing. I upload new videos every 2 weeks. The stock I decided to sell was American Waterworks. Now this might surprise some of you because AWK is a high quality business. It's one of the most well-known water utilities in the United States, and it has a very strong track record of stability, consistent revenue, and long-term performance. This is the type of company that a lot of long-term investors feel comfortable holding for years, even decades. But as I've been thinking more deeply about my portfolio, I started asking myself a simple question. Not just, is this a good company, but is this the best use of my capital right now based on my long-term goals? And that question led me to make a change. So I sold AWK and I used that capital to start a position in American Electric Power. This move really comes down to a combination of growth potential, income, and how I see the future of infrastructure playing out over the next decade. Because while both companies are in the utility space, they operate in slightly different areas, and those differences matter more than you might think. AEP is heavily focused on electricity generation and distribution, and when you zoom out and look at where the world is going, electricity demand is becoming a bigger and bigger story. You have the rise of artificial intelligence, which requires massive data centers that consume enormous amounts of power. You have electric vehicles becoming more and more common, which increases demand on the grid. And even beyond that, just everyday life is becoming more electrified. When I think about those trends, I see a long runway for companies that are positioned in the electricity space, and AEP is right in the middle of that. At the same time, you still get the core benefit of a utility company, which is stability. These businesses are known for predictable cash flows, regulated operations, and the ability to provide essential services that people rely on no matter what the economy is doing. That's something I always want in my portfolio, especially as I continue building a long-term foundation. Another big factor for me was the dividend. AEP offers a strong and reliable dividend, and right now it has a yield of around 2.79%. And on top of that, it has a history of growing that dividend over time. And that matters more to me than I think a lot of people realize. Because I'm not just focused on growing my portfolio value, I'm also thinking about the income it can generate in the future. When you combine a stable business model with a solid starting yield and consistent dividend growth, it creates a powerful compounding effect over time. That yield may not sound extremely high at first glance, but when it continues to grow year after year, it can become a meaningful income stream down the road. There's also something to be said about scale. AEP is a large, established company with a wide operational footprint across multiple states. That kind of scale brings a level of resilience. It's not overly dependent on one specific region or one narrow part of the business. It has diversification within its operations while still staying focused on what it does best. Another thing I've been thinking about more recently is how important it is to balance stability with forward-looking growth. And I think AEP does a good job of sitting in the middle ground. You're not taking on a ton of risk, but you're still positioning yourself in the area that could benefit from long-term structural trends. Now, I want to be very clear. This decision wasn't about AWK being a bad investment. I still think it's a great company. In fact, for certain investors, especially those who prioritize stability and water infrastructure, AWK could absolutely make more sense. At the end of the day, I started looking at my portfolio and asking a simple question. If I had fresh capital today, would I still choose AWK? Or would I go with something else? And the honest answer was AEP. Not because AWK is a bad business, but because AEP gives me better exposure to where I think things are going over the next decade. This also brings up something that I think a lot of investors overlook, which is opportunity cost. Every dollar you invest has a job, and if that dollar is sitting in one stock, it's not working somewhere else. So even if a company is solid, you still have to consider whether there's another opportunity that could potentially serve your goals better over time. That's really what this move represents for me. It's not about chasing something new or reacting to short-term noise. It's about slowly refining my portfolio to better align with my long-term trends and income potential. Going forward, I'm going to be paying close attention to how AEP continues to grow, how it manages its infrastructure investments, and how the dividend evolves over time. Because if the broader trend of increasing electricity demand continues, companies like AEP could be in a very strong position. At the same time, this is also a reminder that investing isn't something that stays the same forever. Your portfolio shouldn't just sit there and change forever. As you learn more, as your goals become clearer, and as the world changes, it's completely reasonable to make adjustments. That doesn't mean constantly buying and selling, but it does mean being thoughtful about where your money is allocated. And for me, right now, moving from AWK to AEP feels like a step in the right direction. So that's the update. I made a move, I added a new position, and I think this better reflects where I want my portfolio to go over the next 10 years and beyond. If you made it this far, I'd really like to hear your thoughts. Would you have made the same move? Or would you have held on to AWK? And what's one stock you've added recently that you feel really confident about? And we'll see you next time.